we have two speakers to come and speak about saving and investing. And we are recording. This is mostly for the use of people who couldn't come. So if you don't want to be on camera, go ahead and turn your camera off. And when we come back from breakouts, if I forget to turn it back on, please remind me to do that. So our two speakers are Ed and Arnie. And if there aren't any start off questions or anything that anybody else needs to say before we go into our speakers, we'll go right on ahead, if that's all right. Yeah. Okay. So Ed's going to go first. And Ed, if you wouldn't mind introducing yourself, and then I think this is supposed to be about 10 minutes with about 5 minutes question and answer, if I'm understanding it correctly.
Thank you. So I'm Edward Doman of Geneva Meeting. I'm a specialist in economic ethics, written umpteen books on the subject. This presentation is rooted in John Woolman's A Plea for the Poor. How many have you read A Plea for the Poor? Gosh. Well, I recommend, it's only 16 pages long, so I recommend it very highly. It's really a key document in Quaker economic thought. Anyway, into the subject. Before we get into saving and investing, what are we saving and investing? So let's start with production. You've got to produce something if you're going to save it or invest it. And it takes the concerted activity of a number of inputs to produce any good or service. And every factor of production, everything that contributes to that, deserves a fair share. Now, a fair share is begging the question, because what is a fair share? And John Woolman had something to say about that when he said two things. The first is men, those are the days, who have large possessions and live in the spirit of charity and regardless of the customs of the times, regulate their demands agreeable to universal love. These, by being righteous on a principle, do good to the poor without placing it as an act of bounty. And he also says, very important, because when we talk about accumulating capital, which is part of the subject of today, he says, if we trace an unrighteous claim and find gifts or grants to be proved by sufficient seals and witnesses, this gives not the claimant a right, for that which is opposite to righteousness is wrong. Now that's very important, because an awful lot of arguments are in our part of the world tend to be about property rights in a single word, and how you have to have all the right bits of paper to say that you're entitled to something. You're entitled to something because you exist, full stop. So much for sharing. Now, saving, because the subject today is saving and investing. Saving is simply refraining from consuming immediately all the share one has received of the current production of the economy. We can save some bread for tomorrow, that's postponing consumption, or we can save some seed for next spring, that's investing. Now, the main point is to keep remembering that in any given period, the economy produces a certain amount, and whatever is produced is used somehow, and you can't, roughly speaking, consume more than there is around, right? So that limits what you're sharing. So the ideas of building up unlimited capital accumulation is just nonsense. Now, another thing we can do is to choose not to participate in production. And John Woolman has an extremely important passage on that. He says, we're all superfluities, and the desire of outward greatness laid aside, and the right use of things universally attended to, such a number of people might be employed in things useful, that moderate labor, with the blessing of heaven, would answer all good purposes relating to people and their animals. Already in the 18th century, he spotted that one. And a sufficient number have leisure to attend to proper affairs of civil society. Now, voluntary running of the public, of the community, is quite normal in Switzerland. There are other parts of the world where that can be considered a very remarkable, not to say revolutionary, proposal. See, the important point is moderate labor, and don't waste time producing or consuming superfluities. Right, that's the key point. Now, let us move on to investing. And the English word investing covers two quite different concepts in French. The first is s'investir, which means to get engaged or involved in something. And placer, which basically means parking, right? Just parking something one doesn't need at the moment. And remember, the Bible talks about people who are so rich that they don't know what to do with their riches. That's parking, right? So, for Quakers, I think the really important thing is getting involved with what your money is doing, what your savings are doing. In other words, you can invest some of your share of the production of society in capital. But in this part of the world, we must never forget this, the owner of capital in a venture is considered to be the owner of the enterprise, not any of the other factors of production. That means, above all, that they are responsible for the behavior of the enterprise. And that is why they need to be involved in what it's doing. Otherwise, they're shirking their responsibility. So I hope today we're not going to talk about investment funds and entrusting it to the bank and so on, which is simply copping out and not taking on the responsibility which properly belongs to you. It is equally true that you don't quit. Divesting doesn't solve anything. It simply passes the buck. So if for some reason you need to sell an asset you own, remember that you have a responsibility and make sure you don't cop out. Make sure you pass it on to someone else who will use it responsibly. So the next thing is that there are always risks in economic activities, and the risks and the benefits of a venture must be fairly shared between all the factors of production. Now, it's true that there is an overriding priority to make sure that the poor get supper. Right? So, in other words, some people are so poor, and it used to be the workers, it no longer is in most countries, that it was only by their work today that they could eat today. As I say, that period has gone. There's much more people who don't have any work to do, who don't have the means to eat today. So you share your risks and your benefits. That's what share capital in companies is all about. And fixed interest is essentially unfair. So putting your money in anything that has to do with fixed interest is unfair. Either it's unfair to yourself because the capital isn't capable of producing the income to which you are entitled. Remember what Woolman said about entitlement, which means that the other factors of production have got to pay what they owe you according to your seals and documents at their expense. Conversely, the venture may be so successful that you're being ripped off. If you're getting a mere 5% when the enterprise is turning in 20, 25%, you deserve a better share. So those are the important things. Now, the question of parking your money, this is sometimes necessary. You want to buy a house, so you have to build up a certain capital to make a down payment on the house you want to buy, and you have to put it somewhere meanwhile. So think very carefully about where you're going to park your money and how, bearing in mind, of course, that in a fairly short period of time, you're going to need it for some sensible purpose. Now, pensions are a big issue in terms of large amounts of money. As I said at the beginning, everyone is consuming what is now being produced. And so what you're doing is sharing today's production. The argument that you must save money and you must give it to some financiers who are going to make oodles of money out of your money so that you can buy something later doesn't get away from the fact that later, too, there is a certain amount to be shared out, and will the people later be willing to share with you? Whether you've got a lot of money or not is a very subsidiary issue. So in other words, paying for pensions by accumulating capital is a racket worked out by financiers to live juicily themselves. That however you look at it, you are sharing today's production. And the founding pension schemes in countries like Britain or Switzerland were based on that. You received a pension if you were of pensionable age out of today's production, full stop. I finished.
Thank you, Ed. I was gonna just, if you don't mind, would you like to summarize sort of I got 3 main points in terms
What did you get?
This as a Quaker. I got, it's a test. Getting involved with what your savings is doing. Don't quit, no divesting. And fairly sharing risks. I got fixed interest is unfair, but I wasn't sure if that fit under fairly sharing risks or not.
What was that?
Fixed interest is unfair.
Well, it's an unfair way of sharing risks.
Okay, so there's 3 main points.
So there are the 3 main points, but the main point is that what we're sharing is what we are producing. We are sharing what we are producing.
Okay.
In other words, it's all going on at the same time. And that is the starting point.
Great. Well, thank you, Ed. That was almost the time exactly. Perfect. So we have 5 minutes for questions and answers for any clarification. I would ask friends to not enter into any heavy discussions because that's what breakouts are for, also what our plenary is for. We'd like to be able to have our speakers speak. So if there's any main points that came up that you have need some clarification on, we have 5 minutes to do that. I see Susan's hand up.
Yeah, I was right at the beginning when you were talking about entitlements, Ed. Could you clarify a little bit more about that? I got lost there.
Yes, John Woolman, who I was quoting there, was making a very important point. We know all about landless laborers, people who don't, in developing countries, who have no land, so they can't produce what they eat. We know all about how, and you in the United States know better than anyone else, how you ride roughshod over somebody else's land, you grab it from them, and then because you have the magic word, the rigmarole of property rights, which I insist is a single word in American thought. And so you can produce a paper and say, this land is mine. Well, balls. This land belongs to the people who need it. And the piece of paper ought to be worthless.
Okay. Hi, Ruth. We're just at question and answer for Ed's presentation. So I think we have time probably for one quick, maybe 2 questions. Otherwise, we can move ahead.
I have a quick question.
Go ahead,
Can I
Arnie.
do it?
Yes.
Regarding divestment, that struck a note with me. Could you just elaborate when it comes, for example, to a fossil fuel company that you own shares in? What you mean by not divesting? How would you explain?
You own the company, right? You own shares in it. Therefore, your company is producing oil, right? Well, that's your problem. You don't think producing oil is a fair thing to do. Well, what are you doing to persuade the company to do something that is fair, right? To sell your share in the oil company to somebody else who probably is very happy to make oil. How have you improved the state of the world by passing the buck?
Yes.
You've got to be responsible where you are.
I completely get that. On a much smaller scale, I had that very distinct feeling when I sold my car. I don't own a car anymore, but I sold it not to have it wrecked, but to someone else who kept driving it. And it had this bitter feeling, it's like, what difference did I really make apart from soothing only my own conscience? Thank you, Ed.
Well, I think if no one has a burning question right now, we could probably move ahead. I realized that I didn't kind of walk us through the agenda, so this might be the moment to do it. Little break between. I wonder if Ron could share his screen. Just so you can sort of see how the rest of the evening will go. Are you able to, Ron? Am I?
No.
Okay.
It's trying now.
Okay. Okay, so we are at the point where Ed has done his presentation. Thank you very much, Ed, for that thought-inducing presentation. Then we are moving on to Arne and also a question and answer. Arne will be presenting for about 20 minutes, although his talk has 2 parts, if I understand correctly. So we'll have a little question and answer after the first bit, and then another question and answer after that last bit. And then we go into breakout group discussions. We have a whole set of questions, which you would have seen in the invitation, and that we'll put those in the chat so we can all take a look at them. And then we come back into the plenary for reporting back, synthesis, discussion. Okay. So is that all right with everyone? Can we move on to Arne's talk? Yeah. Okay, thank you, Ruth, and thank you, Phoebe, for joining us. We are recording, so if you don't want to be on camera, go ahead and turn off your cameras. But we are recording, so there will be a transcription of the whole thing. And what was the other thing? And we're also taking notes, and we're going to ask in the breakouts for people also to do some recording as well.
And I
Okay.
think we also have a handout from Ed, which we can send afterwards. Right, Ed?
Right.
Okay. Thank you, Susan. Thank you, Ed. And I will turn it over now to Arne for the total presentation of 20 minutes. But I will time you if it's okay, Arne, I will hold up my hand at about the time that I don't know if your presentation is exactly 10 minutes and 10 minutes, so I feel a little
No,
bit at a
I'll be.
disadvantage, but
I went through it with Ron, and I'm aware that I have to keep things short, and that's what we have the question and answers for.
okay,
And
okay.
if you just hold up your hand, I can't see you, so you have to quickly say something, but that's fine too.
Well,
Okay,
we'll try and keep an eye out as well
please
so that we
do.
can say
Please
who
do.
has questions.
Yeah.
Okay, thank you.
Let me just say a few things to introduce myself. I live in Prague in the Czech Republic. Originally, I'm from Germany. I've worked as an entrepreneur in a small company since around 2013, doing energy efficiency. And then in 2018, I became an activist with Extinction Rebellion and have been doing that full time. So I basically stopped my career in energy efficiency and was on the street with Just Stop Oil with Last Generation in Germany. And right now I'm being dragged through the courts. So I was in court yesterday in Nuremberg and was found guilty. And I will be in court tomorrow in Berlin. So this was perfectly fitting in between. For this topic here, I have a friend who in Prague who got in touch with me and became a friend about 5 years ago through Extinction Rebellion. And he is an asset manager, wealth manager. So he knows the world of finances. And he says he was very influenced by my witness as an activist and has been talking about a fund, a financial fund for years to me. And finally, last summer, it clicked, that this would be the next thing I need to get involved in. And this is how this presentation came about and how also I happened to be on this call because it all seems to come together a little bit. With that much said as an introduction, let's just get going. I called the talk "We Are Being Challenged" because the challenges are humongous, and probably most of you have heard of the Great Acceleration. But the main question I want to pose to us here, are we Quakers being examples and patterns in our world? And a large part of this talk will be actually about the stock market and how it is a system which is scamful, which is actually not working for us. It's not working to change anything. And it's just turning over money to make stockbrokers and banks wealthy. And we'll talk about that, so just keep that in mind. So the reality is that despite the facts in the world, we're pulling out of the green agenda. We're pushing back into fossil fuels. And the response by Quakers is, we are very much in that realm. We are fighting for climate justice. Just 10 days ago, there was by British Friends, a press release, where they've signed up to a new global initiative. And there are the words in there: we have to build the kingdom of heaven here on earth. We need to urgently shift to a low carbon economy. I couldn't agree more, but I have to ask the question, are we really doing that? So there are 3 queries I want to go through. Have we divested? What is investing in stocks and shares really doing? And what if we invest in green progressive companies? What does it do? So as part of our exploration, we were thinking of the Joseph Rowntree Charitable Trust, who I cherish as an organization, and were wondering if they could maybe, you know, help us getting started. And so it came to be that we looked at their annual reports, and so the question of divestment came up. And so on the right side, you see the Joseph Rowntree Charitable Trust, which has about 300 million pounds in its assets. They claim we are divested from fossil fuel extractive companies. Please note the word extractive. On the left side, the other Quaker organization we looked at is the Friends Fiduciary. It's the biggest Quaker financial fund in the US. They have about $950 million of all Quaker individuals and organizations. And they also claimed in 2020 that they have divested. So this is the first scam I want to say. And I'm not saying this to criticize these two organizations. I think it's to criticize all of us. This is the world we live in. And I'm sure these two organizations are meaning very well and are actually consider themselves to be on the forefront. So the biggest fund that the Friends Fiduciary has is called the Quaker Growth and Income Fund, and it has $600 million invested with a return of about 4%. And they list on their website the top 10 equity holdings that they have. You see them on the bottom left corner. And if I put another slide here, which are the largest companies in the world by market capitalization, we actually see there's a good overlap. So the biggest Quaker fund is investing the biggest share, 60, 70% of their money in the biggest companies in the world. And I just have to ask the query, could we have a better use for our money? And to be true, they have divested from extractive companies. They are at the bottom center here. But, you know, investing in all these other companies, they certainly are not necessarily green and progressive, and they all use fossil fuels. That's the number one. If we go to number two, is investing in stocks actually like gambling? So 99.5% of the Joseph Rowntree Charitable Trust money and the Friends Fiduciary Corporation, as well as the finance part of Britain Yearly Meeting, are invested in stocks and equities. And just to give you one example here, in 2022, the Joseph Rowntree Charitable Trust suffered an alarming loss of almost 20%. They lost 64 million pounds in 1 year because of the market, decreases in market value. The markets went down. And still, the global fund managers, an external company, they got paid 800,000 pounds for this performance. They're usually getting around 2 million. So I'm again asking queries, you know, is this how we want to be stewards of the money that we have? Is this how we want to create profit that we then use for very good purposes, which I have no doubt about in the Joseph Rowntree Charitable Trust? The third issue we have here is when we look at green, progressive, climate positive companies, we certainly must make a difference here, right? So this is to acknowledge Britain Yearly Meeting, which have been on a path of shifting by now about 60% of its 10 million, which they have in their portfolio, into progressive, non-harming, climate positive companies. You know, that's a broad topic. And that must be good news, right? So here's just an example at the bottom. You know, they also invest in Deutsche Bahn bonds and 200,000 pounds. And I just ask the question, would Deutsche Bahn really listen to them if they approached them as a stakeholder? So I put that out as a question. But more importantly, we have to look at this, which is called, it's probably a new term for most of you. 99% of stock share transactions make no difference at all to the target company because they're in the so-called secondary market. The fact is, when we buy a stock or a share, we only pay our money to the previous share owner. The target company, in which name the share is, does not get a single penny from that transaction. The banks and brokers do. They get about 1%, you know, if you're good. So there's no impact. So we've shifted, Britain Yearly Meeting has shifted 60% of their assets from harming to now progressive good companies, but there's no impact, as if we hadn't done it. The graphic at the bottom explains that. We give our money, and basically we're speculating on the rising of the stock price. Sometimes it goes up, sometimes it goes down. Also, there might be some dividend payments which come from the target company, which actually take money away from them that they could be using to doing good things, But none of our money actually gets through to the company. For example, a solar panel producer, they will not have a single penny to actually build more solar panels from that. Now that's a bitter pill, I think, to swallow, and I'm looking forward to your questions on that. And the first part I want to finish with reading together with you this part from Quaker Faith and Practice about honesty, integrity, and gambling and speculation. And please note it's almost 100 years old. Rory, can I ask you to read that first paragraph? I can catch my breath.
So much has the public conscience been warped from the living truth that a man who has acquired wealth by operations on the stock exchange is spoken of as having made his money, regardless of whether any useful purpose has been served. One who identifies the status quo with the divine law regards such an accession of wealth as something to be accepted with thankful heart, like manna from heaven. True enlightenment would show that if nothing has been given in return, the wealth so gained has been misappropriated, and the whole transaction, though sanctioned by law and custom, is, in its essence, a violation of the 8th commandment.
Thank you. I'll continue. In our advices from 1931, we are warned against commercial speculations of gambling character, and we are told to remember how widespread and diverse are the temptations to grow rich at the expense of others. The faithful observance of this advice points the way to an issue greater than personal rectitude with regard to gambling. It should lead to an examination of the system which permits or encourages these abuses, and to a demand for drastic changes. So it seems that maybe 100 years on, we are at such a point where we actually need those drastic changes. Now, this is the first part. Any questions about what I've presented are very welcome now. Yes, please, Jill. Can't hear you. Yeah,
I
no.
understand the point you made that if you divest, the company is none the poorer. It just means somebody else holds it. But it does affect the company because it contributes to the price of their shares reducing and makes it more difficult for them to raise money. And conversely, investing that money in a company which is doing no harm supports the price of that company's shares and makes it easier for that company to raise more money. So I don't think that divesting doesn't make any difference, is what I'm saying. I think it does make a difference, but not a whole. It doesn't absolve you from responsibility, if you like, but it does. It does make funding more difficult for the company that you divest from.
Yes, and I think you're right with that in theory, but in practice, if you own some shares in a company and you're selling them, I really doubt, actually, no, I know as a fact, it won't affect the share price. The level where we are investing at will not affect the share price. You need a large pension fund or a fund like BlackRock. If they sell a big chunk of their possessions, that will affect, and they are speculating on these kind of deals. But, for us at our level, and that would include, the Quaker organizations I mentioned, there's no impact on the share price if we buy or sell the shares. And so that I think is a major point, you know. While in theory, yes, you're right, but not at the level of the size of the market. Thank you, Jill.
That's interesting and helpful, and
Yeah.
suggests to me that there is a witness about asking wider groups of people to do this divestment. But it seems to me there is a parallel in, you know, for example, conscientious objection. If I am asked to go to war and I refuse, it's not going to stop the war.
Yes.
Mm.
But
No,
I
that's a
still might
point well
refuse.
taken. No, and I think with our witness, we definitely influence all our surroundings, you know, and people in general, but maybe not the share price. Thank you, Jill.
Well, I do believe that there might be some natural experiments. For example, in the case of apartheid, did some people selling make any difference to the share price? And I
Mhm.
do notice that Tesla's price has gone down a lot because individuals are thinking, yeah, don't want to support that.
Yep, that's a point well taken. I agree. Andres, let's hear your question.
Thank you very much, Arne, for that presentation, and it's very eye-opening because, of course, I mean, the Joseph Rowntree and BYM all are our main donors as well of the Quaker United Nations office. So it was very eye-opening to hear you, and I just wanted some clarification, or perhaps you can explain a bit more about the secondary market.
Yes. So the primary market is when a company actually has what they call an initial public offering. They're raising funds and they say, we will bring out some shares. And usually the individuals or organizations that are buying these shares in the primary market are big pension funds, big players in the market, not individual investors. Once there are owners for these shares, that's when the secondary market comes into play. And so whenever you buy a share from a company, and that's really what we are involved in through funds or, you know, through these Quaker organizations, they would buy in the secondary market. It's very unlikely that they would buy in the primary market. And all that does is actually it changes the list of names of the shareholders, you know, but there's not a single cent or penny that goes to the companies. And I think that was news to me until a few months ago, and I found it shocking. Yeah. Jonathan.
And just a little bit about the primary market and so on. I mean, one of the big changes over the last 20 years has been the development of social enterprises of various sorts, raising small amounts of capital. And one of the ways in which ethical financing has been shifting is away from the sort of big unit trusts which have all sorts of hidden ill effects very often associated with them, to particular things like companies putting or organizations putting solar panels on the roofs of schools and all sorts of stuff that is really quite simple, in much simpler in terms of its ethical dimensions. And they're raising this money, and the more they raise, the more they can do that sort of work. That's fairly fine for people who've got money that they can afford to lose. It's a bit harder for Quaker institutions and for poorer people to go down that route, but it is a route that is very much being developed and extended at the moment, I think.
Mm-hmm. Yeah, I agree. There's always the diligence of diversifying, of not putting everything in one location. At the same time, let me remind you that we've seen in 2022, you know, even the big funds, they all lost big amounts of money. And I would say if you invest in shares or bonds, you're much more at the mercy of global politics, you know, than at actually what the company is producing in terms of value, you know. So Mr. Putin invades a country and all the shares go down. It has nothing to do if that company has been performing well or poorly, you know. And that is a key thing. That's why I dare call it speculating and gambling. And that's, I think, not right. Yeah. Is it okay if I move on to the second part?
Yes, please. Thank you.
Okay. So, let me just get small. We discussed the problem, and now let me show you that, you know, I don't just want to raise a problem here, but also show a path that we can actually have an impact, and that we Quakers, even though we don't have huge amounts of money, we could use that money impactful and inspire others. And I like very much to quote George Monbiot here, who said, let's aim big, let's roll up our sleeves and get down to work, because it is work. You know, it's not as easy as just going to a bank and investing and giving an order to place an investment. So my friend and I, we're starting the Transformation Builders Fund, and this is a proposition for active change makers, including Quakers. This is the vision that we have: transformative change. We accelerate transformative change by creating real divestment tools and sustainable systems that support climate restoration and embody the future we stand for. We drive transformation by creating a fund dedicated to sustainable, community-centered projects. Our profits are reinvested into bold activism, climate restoration, and systemic change. Our activism is rooted in building the world we envision. So let's look at how this could work. So if the problem is huge, we must aim big, and we know the problems about the problems we have in the world. We are done talking. Let's actually start building something, and let's move from the diseased old economy to something new that can benefit us all and help us. So the Transformation Builders Fund redirects fund away from non-climate supportive and non-impactful investments to climate supportive and impactful ones. We collect for that, you know, funds from primarily at the beginning large seed investors, but definitely want to open it up for also small investors, and also from organizations and other funds. Let me stress here that neither the Joseph Rowntree Charitable Trust or the Friends Fiduciary are investing in the Transformation Builders Fund. I would very much like that so, but we're just not quite there yet. But we will, in the coming weeks and months, approach them and present our concept. Yeah. Now, with those funds, we want to actively build and then manage real projects, real assets. So this is not investing in any way in shares in the stock market, but it's building new climate supportive projects and companies that benefit the community and therefore our existence into the future. Now, as part of these companies, we are quite sure that we're positive we won't have any market standard bonuses to management, no transaction fees. You know, we want the real costs to be covered, of course. We want fair salaries to be paid, but there's no such thing like each time there's a percentage, you know, in order to make people, you know, benefit from the money shifting. There will be shared profit arrangements. What I mean by that is if a small investor says, well, I really need to make some money from this money, you know, we certainly open for that, you know. We will also offer the possibility to share all the profit in order to reinvest it into change, you know. So that might be a thing for the more wealthier investors to do. And so the dividend should be used as an acceleration for much needed change. And as part of this project, obviously, you know, this will create quite a few new employment opportunities. So in the pictogram here, there can be social housing, there can be renewable energy sources, there can be circular economy projects, there could be a local bakery, everything that actually generates an enterprise a profit, you know, why not? You know, let's build a new economy, and it could be a network of mutually supporting, sustaining projects and companies. So what we do with the net profit? After all the expenses are paid, there should be some profit that's generated. And We want to put that to grant awarding. If I go to the next slide here, that's actually what the Joseph Rowntree Charitable Trust is doing. It exists for the sole purpose of grant awarding, and they give about £11 million every year. So if they invested in our Transformation Builders Fund, we would be very happy to give 100% of the net profits to them, because they already do very good things with that. But not all investors might have that vision, and we would then have conversations with them and invest it in social activism, climate restoration, building and scaling a new system, things that are traditionally underfunded and actually need money in order to help us change and pull the situation around. So this is just a recap of what I've said. It's important to note we focus on additionality. We want to actually build new assets and then operate and actively manage them. A prerequisite is climate positivity and also social benefit. But at the same time, our approach is to be pragmatic. We don't want to be ideological about it. Just to give you an example, if we have a solar park, it will have to be built on steel or aluminum racks, and they are probably not yet easy to produce climate positive. The focus, I said, is initially on large investors to get started and have an impact, and then we will open up opportunities for small investors. We will also focus on transparency, and we really want to be aligned to Quaker ethical values and testimonies. And we welcome oversight. I would love this to become a Quaker thing, something that we all pull our weight and actually come forward and show our surroundings that we are engaged in this process and not paralyzed. And yes, we will compete with business as usual, and hopefully we will win market share by being more attractive in the concept and being more truthful. Here's just 3 quick examples. One is a solar park in the Czech Republic. It would be one of the largest. So this is a €100 million investment. It's big, we are aiming big. Another one is a smaller fund, €1.5 million for hydro projects, also in the Czech Republic. There's definitely the idea to diversify also to different countries in the future, but we're just getting started. And then, yeah, those are the 2 examples I have here. There could also be social housing and senior citizen housing. All these projects, enterprises can deliver a profit, that can then be used and are safe investments. So let us again be examples and patterns, walking the earth, answering that of God in everyone. That's my wish. Thank you so much for listening. And please, if you have any clarifying questions for clarification, let's have them now, because otherwise we'll have the discussion in the small groups. Just if you have us at the top of the list. No, there's no question yet. Okay. I couldn't see you.
Arnie, can I
Yes.
just ask?
Yes.
How do you intend to avoid falling into the same traps of secondary marketing?
Well, we won't be participating in the stock market. If we get money, we will actually build a solar park. And then we own the solar park. And therefore, it's like a system which is beside the existing financial system. And the long-term strategy is actually to pass it over to local community ownership, like a cooperative. Paul.
I wondered, it sounds a really interesting plan, Arnie. I was wondering who owns TBF itself? What is the legal vehicle that you have, and how is that protected from somebody coming in and saying, well, you're now worth, 25 billion, and we just want to take you over and we'll pay each of you a lot of money to do that?
Well, that would be against our values, right? I would be selling my soul, I guess. If we set it up in order not to do that, then, that would certainly be against any investor agreement that we have signed with potential investors. This is a vehicle to change the world and not to make more individuals rich. We got enough of those. So the legal vehicle, we haven't founded it yet because we're waiting. It depends. If we go for the solar park, the 100 million investment, we need a stronger body for that. It could be, for example, a European stock company, and that doesn't mean like stocks like in the stock market, but it's a European-wide agreed, like a limited liability company. If we start with a smaller fund, then probably just a local limited liability company would be sufficient. So that's depending on what we start with, and that's again depending. We're waiting for a large German investor who might, be able to commit at the end of this month. So basically, we're adapting the legal vehicle to the situation as we have it. But it will all be obviously legal and transparent. Please, Phoebe.
Yeah, I think the ownership model will be quite crucial. And I would also say the risk. You'd need to have a good risk register. I find Quakers are very conservative with a small c with their money.
Yeah, I liked what Ed said in the beginning, because I cannot guarantee there's no risk. But if we invest in a solar park, we know there is a need for electricity. We know there is a grid for electricity. These are all things that can be contractually arranged. We would see, to have power purchase agreements, so we have fixed prices, and we can therefore determine the profitability right on from the beginning. The longer term plan is to provide energy to households, but that takes some time of setting it up, obviously, and it would probably be partnering with already an electricity company that would be happy to cooperate with us. But yes, there's some risk, of course, and we would definitely look at limiting that risk as much as we can. Jill. I can't hear you.
Is there any reason for not being a social enterprise where the goals are specified in the articles, the foundation documents, and that, constrains the use of the money? Is there any reason to be a normal stock company rather? Why not be a social enterprise is what I'm saying.
I think the reason is, like, as a small company or organization, you cannot receive 100 million euros. There's regulations for that. So you always, for me, this is a social enterprise, and that is just the, and I'm not the expert speaking about this. That would be my partner, so maybe I'll ask him about that. But for me, this is a social enterprise. But from a legal point of view, when you get into the tens of millions, you need you need a legal body that is able to do that. And
a
that
social enterprise is a legal body, but the application of funds has to be in accordance with its aims. It can't just say, oh, medical imaging is more profitable, we'll go and do that.
Okay.
It puts its charitable purpose in its aims,
yes,
or its public purpose. And it's different from a co-op, but also a co-op has aims whereby the employees are part of it and share in the gains. So there are two other possible models.
Yes. I guess my answer to you would be, at this point, we want to get started and to be pragmatic about it, and to just start a corporation, a limited liability corporation, is probably the easiest for the size that we are. And if we need to change it, we are very happy to evolve. And in a sense, also my vision is the Transformation Builders Fund will not save the world, but it might contribute to models, that can be imitated by many other organizations if this is successful. So, for me, Yes, there probably will be some dead ends, some mistakes we do along the way. And I just want to, be transparent about that so we don't repeat mistakes.
I think that's great, and I think we pay research about what models already exist and how they are managed. It's good to get started and be easy, but it's not much trouble to start a social enterprise, because I've been involved in it, and I wouldn't do that if it was, not alone, obviously. And also, I'm not an expert, so there'll be people much more expert than I am on what is involved. But if there is a social purpose stated, that is part of the founding documents, that does ensure that it can't be easily taken over and used for
Yes.
something else.
No, and I think that should most probably be part of that, because we don't want this to be taken over. This is too important. Thank you.
Thank you. I'm going to take that opportunity to do a plug, Jill, for your talk, which will be later this month on just social markets and corporate governance. So we look forward, and I hope that Arne and Jill will probably continue that conversation into the future.
Okay, thank you. I'll talk about social market and things like that.
Thank you. So we have our breakout rooms. As you may have noticed, we're running behind time. I am going to propose that we have slightly shorter breakout rooms and also a shorter plenary, and that we'll leave it open for those who want to go back and have more discussion at the end. So then we can finish hopefully by 9 o'clock for those who have something to do at 9 o'clock. So these are the questions for the breakout groups. We're going to put it in the chat as well so that you have them in both places. But you could also, perhaps you could screenshot this and stick it in the corner of your screen. That's also another way to do it. We have 3 rooms. Don't get confused if the room says 5, 6, and 7. I was having trouble making rooms, so I ended up making many rooms. But we really only have 3 rooms, and we're going to ask that you do a quick around the table just to get the brain warmed up with the first 2 questions, and then move on to the other questions to discuss. Realize it's a lot of questions. But this is just kind of to get us all thinking in this mode. If you find that you get stuck on one question, well, then that's okay. But so just, I guess, do your best to sort of do the questions as you see fit in your group. Okay. So I'm going to, sorry, go ahead.
Yeah,
Susan.
also, we want to have somebody to put their name forward to be the rapporteur, or at least to get the discussion going later on. So somebody take notes, please.
Thank you, Susan, for reminding us of that. I am just going to put the questions in the chat right now. I believe that stays, oh no, that didn't do it. I believe that should stay in your chat even when you go into the breakout room. I'm not going to open the rooms. Please accept, and we will see you back in 20 minutes. Thank you.